This video is sponsored by Terrell Hutton, who makes the invisible investable. Today on the CEO Barbecue, we're looking for high-grade gold, silver, and copper in the Yukon, together with Prospector Metals. If you want a bullet point summary of this and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, although the company you're about to hear from has not paid us for the production of this interview, you should still not treat this video as research. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. In any case, please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is an extremely tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, and it is also going to contain forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. Although this company has not paid for the production of this interview, it doesn't mean they won't become a client in the future. They might. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Prospector's current strategy centers on the district scale Mike Lake project in the Tombstone Belt in the Yukon, where drilling at the test zone came back with grades as high as 13.8 grams of gold and 1.8% gram of, 1.8% of copper over 44 meters. This is about a 10,000 hectare land package, about 80 kilometers from Victoria Gold's Eagle Mine, and it's also in the same neighborhood as Snowline's Rogue project, which we'll definitely address when we talk about the deposit type that Prospector is dealing with later on. The discovery Prospector made at test was actually a blind one, as it's undercover and it's hosted in these intrusive related breccias. So these aren't kind of like massive uniform blocks of ore, if you will, and the mineralization here runs along specific fracture sets and plunges, which makes the geology complex, and it also opens the door to more conversation later on. The plan for 2026 has been announced. It's 25,000 meters of drilling with 3 rigs that they'll be turning there shortly, costing about $15 million for the total program, so that's 1.5. And now the first holes will try to expand mineralization along trend as well as to depth, with additional drill testing on new targets that Prospector believes look similar to tests, which is also something we'll talk about later. Have they really cracked the geological code, though? How replicable is tests, and what would they consider success this year are among the questions that we'll be asking later on in the conversation. Until recently, Prospector also had some assets in Eastern Canada, but they're now in the process of selling those or kind of spinning them out almost. It'll become clear later on as well, but they're selling them essentially to BeMetals for about 30 million shares that today are worth about $1.8 million. So a bit of an update on that later on as well. Now, for some of the numbers and details here, Prospector is listed as PPP on the TSXV, where the average 3-month volume is about 430,000 units. And until now, I didn't realize that PPP and TSXV rhyme, but that's a cool fact for you there. 52-week high is $1.75. 52-week low is 13 cents. So quite the run up there. There's just a little over 158 million shares outstanding and a $269 million market cap. That means today this is a $1.70 stock with a 50 and a 200-day moving average at $1.35 respectively and 98 cents. So the stock is now trading well above those two, as well as very close to that 52-week high. About 23.5 million warrants, options, RSUs, and DSUs are outstanding combined, together representing about 13% of the 182 million fully diluted shares. Management and insiders are noted at about 5.7% of the company. Alex Gubbins is as of recently also a shareholder of the company, significant shareholding there, and B2 is the largest single entity shareholder. They hold 18.8% of the company. As of May 1, the presentation says there's $43 million in treasury, but as I said earlier, the drill program will cost 15. So where's the rest of the money going? Hopefully not to private jets, though I will be asking about that later on in the conversation. But for this to actually become a conversation, though, I'm going to have to shut up already. And Rob, I'll give you the word. But first of all, thank you for sitting down with us today.
Yeah, nice to be here. Thanks for the introduction.
Well, the pleasure is mine. I'm looking forward to the conversation. Christian, this one's your fault. Actually, you own this stock, as far as I understand it, and you invited them as well. So I'll leave most of the work to you.
Yeah, thanks, Antonio. I was lucky enough to be in the 11th cent placement. So
Wow.
Rob, thank you for the shareholder value creation here. Well, thanks for joining us, Rob. And to set the stage here a little bit, as Antonio mentioned, there's a $50 million program starting any day now, I believe. But you got 42 million in cash.
Mhm.
What's the business strategy here for Prospector in 2026? Will it be solely focused on Mike Lake? Will the $15 million program be flexible, or are you looking to
Mhm.
do any consolidation in the area?
Mhm. Yeah, thanks. So the 43 million came about, I don't want to say by accident, but we weren't looking for it. In the fall, when we were finishing our drill program, we thought, what can we do in 2026 effectively, right, and efficiently? And last year we did one drill for 6,000 meters, and this year we can do three drills for 25,000 meters. So we're quadrupling the size of our project. And that's the amount of drilling that can accomplish our objectives. Objective one is find out that our drill hits from last year are real. In other words, we're going to try to expand them in every direction. And secondly, continue to find new zones. Now, so that budget is about 15 million. Now, the 43 came about in the fall when B2 Gold, who at the time owned 9.9% of Prospector, approached us and wanted to go to 19.9. And that was a big check. And Alex Gubbins came in at that time as well. And I will note those were non-brokered, no fees paid, and no warrants paid. And that combined with a little bit of flow through for some insiders got us to 43. So the intention was never to raise 43. But the price we raised it at was 97 cents, so it was definitely accretive from the last financing. And it did a few things, which I think are really important. One is that with that treasury now, it means the bankers are not going to be on my back every time, right? So we're not living hand to mouth. And I will say the question is, well, what's the rest of that money doing? It's sitting in a nice GIC, earning interest, paying for most of our G&A. Right. So the money is going to be sitting there. And now we do have the ability to ramp up if we choose without going to market. But the real benefit to this is that it allows our geologists and our management team to focus on this project without that looming money issue. So it's going to give us, and I mean, you'd have to ask B2 why they did it, but I think if I were them, the big reason was they didn't want us worrying about money. They wanted us worrying about geology, worrying about drilling holes. And so now we can afford to be systematic with how we do our exploration this year and really be thorough. So I use the expression, we get to explore it like a major, but have the upside of a junior. And that's one of the real significant benefits of having that treasury is it may not seem like a lot on face value, right? But having that money there and not having to worry about the looming financing to continue to upscale the program or even continue it. I mean, as a CEO, and I'm a geologist as well, right? But even as a CEO, everyone would say, well, what's the CEO's job? Number one job is money in the bank to fund the programs, and two, make sure the programs are financeable. Right. And that can take up anywhere between 30 to 50% of your time. And managing the company, managing the people, we just finished our audit. That takes time. Your day fills up pretty good. And the time left for geology, I mean, we have a great team of geologists and I keep the corporate load off of them, but I love to be involved in it too. And they feel the stress, right? They feel the anxiety, and they've been involved in companies that have lived drill hole to drill hole. So the treasury came about again. I don't want to say by accident, but it definitely has some benefits. And the old adage they say, well, if the money's there, take it. I have a hard time arguing with that because there are many sort of benefits that helped a company that I don't think are obvious to the market?
There's loads in that answer, Rob, that we're going to pull apart and then pull on threads later on in the conversation. But since this is your first time on the barbecue, it means I have to annoy you a little bit first.
That's
But
okay.
not before the most fundamental barbecue question here. How do you like your steak?
I'm not a big steak guy. I grew up on the East Coast of Canada, so I'm more of a seafood guy. Um, but I like a nice medium ribeye, I would say. I don't like it too fatty, or I would do a medium rare strip loin, as well.
I heard nothing after. I'm not a big steak guy. I typically tune off everything that comes after that. I do want to know more about that, but people listening should also want to know more about Tara Hutton, who doesn't only make the invisible investable, but they've made this video free of YouTube ads by sponsoring it. Tara Hutton is built for the people who are tired of going through boring PowerPoint decks and geological jargon when they're analyzing mining companies. It's a digital platform where the data, the story, and the context sit together so mining investors can use visuals to understand the why without needing a geology degree or a week off work. And if you're on the company side, it's a great way to present your project like a serious operator with everything investors keep asking for in one place. Contact them at terrahutton.io. Where it's interesting to talk about these things and listen to you where you want to take the company, but I also have to get to know you first. So all jokes aside, I want to understand the incentives and the track record of management. So I'm going to start off with yourself. Obviously, who are you, and have you made more money for shareholders than what you've spent during your career so far?
Yeah, so I'm a geologist by trade, and I started working in mineral exploration when I was a teenager. I got a job working for a company called BHP Utah Mines, and they were working in some gold projects in Northwest Territories, and I was a laborer. I did soil sampling, geophysics. I did all the stuff that, laborers do. And I didn't know what I wanted to do with my life. I was at university and I was actually a history major. And I'll be honest, that first year in the field, I hated every day. It was hard work. I wasn't used to it. Bugs were terrible. And then I couldn't wait to leave. And then as soon as I got back to university, that's all I talked about and all I thought about. And I thought, well, you know, those geologists seemed like they were pretty happy guys. And they made a gold discovery, the Ulu gold discovery, in 1989 by BHP Utah Mines. It's about 1 million ounces of gold. I was there as an 18-year-old, cut the core from the first hole. They made the discovery without me, but I was there and I saw the enthusiasm, I saw the passion, I saw the excitement. And I thought, wow, I don't really know what those guys are doing, but it looks like fun. And so I went back, took some geology courses, continued to work for the majors for most of my career. Did a master's in volcanology, and I was lucky enough to do my PhD in the Meliadine gold deposits in Nunavut, which was sponsored by the company at that time was called Western Mining. And Western Mining was known for its really good exploration division. It was run by a guy named Roy Woodall, and I joined the company when he was on the tail end of his career. He's the guy that found Olympic Dam in Australia. He found Kambalda nickel fields in Australia. The guy's discovery list is longer than your arm. And I was lucky enough to be involved in the teams with that. So I really got the flavor for exploration and real discovery aspects of things. I'm not a miner. I mean, I've been underground. I worked at the Lupin mine and underground in Nunavut. It's terrific and can be rewarding, but I'm an exploration guy. And, after my thesis, I went to work for the federal government in Canada in Nunavut as a district geologist. And my job was to monitor exploration activities over a small portion of the world, or approximately 23% of Canada. That was the size of Nunavut, and I was one of the district geologists there that monitored activities and monitored claim status. Terrific opportunity. And then I was in a geoscience forum talking about my rocks and my research. And in 2004, and I was approached by a guy named John Robbins, who's a well-known Vancouver mining geologist, and said, "Hey, Rob, why don't you quit your full-time cushy government job in Nunavut and move to Vancouver and come work with me and start a new company? Because I've got some claims near Rankin Inlet, and I think it'd be terrific." And I said, "Let's go." And so that company we started was Kaminak, and that was in 2005. And although we never found anything in our Nunavut portfolio. I became, John and I became very close, and he introduced me to all the mining guys in Vancouver. So I got a flavor for mining finance, right? So up until I was 32 years old, I had never really had a personal credit card. I had like a bunch of student loans. I didn't know a bid from an ass, right? And so I learned the business aspect of junior mining with John and Jim Paterson in the Discovery Group. And we continued the model, like the vision was continue to try to find big deposits, or find transformational things, right? Find things that are going to make a big difference. And that might sound like a tall order, and it is, right? But they're out there. And I've seen, like, when I was just finishing university in the early 90s, the dogma of the day was saying, well, all the gold's been found in Canada on surface. You need to go deep, right? You got to remember that phase where it's like you got to drill deep holes or nothing on surface. Well, I mean, since then, there's probably been 50 million ounces of found right on surface in Canada, and the opportunity is still there. These deposits are hiding in plain sight. And I've been lucky enough to be involved with a few of those. Like, as a student, after Ulu, I was there when they drilled the first ever hole at Hope Bay. And I saw how that developed from a single 3-gram grab sample to multi-million ounce gold resources over 60 kilometers. And then I was lucky enough to be one of the early geologists at the Meliadine district, and where Western Mining made big discoveries there. And you see these massive discoveries made, and you realize, hey, they're made by normal people, right? And they're there, and once they're there, you look back and you say, gee, how did you do that, or why did you drill that hole? And I'm a big fan of exploration history. So everyone that makes a big discovery, I seek them out and I ask them the questions. Why did you do it? What did you know? And notoriously, the question is when were you ready to give up, right? And what was it that turned it around? Why did you believe? And everyone has the story, whether it be the Chuck Fipkes of the world or the guys that discovered Aurelian in Ecuador. It's that they knew the footprint was there, the calling card was there, right? Mineral deposits can be very small spatially, but they are messy signatures, messy calling cards. They're and big energy, and most of it can be confused with other rock types, but that, looking at it that way, and I really got interested in that. And then, fast forwarding to 2010, I went into the Yukon, and I'd never really worked in the Yukon before. I was an Archean gold structural geologist in my previous life in Ontario and Quebec. And I'd always been intrigued by the Yukon, but I never really gotten into it because, my mindset had told me that the deposits were low grade and bulk tonnage. And getting back to my idea that we need to find transformational deposits, someone says, well, it's easy to say, Rob, but what is that? And in my mind, it's 3 things. One is high grade, right? And by high grade, I don't mean 1.5 grams, or 2 grams. I mean, multiple grams per ton. And those things, grade is king. Those things are cliches, but they're real. Now, so looking for things that have a high grade footprint. Number 2 is scalability. A lot of people use the word district scale, and I think it gets overused, but you have to be able to have the ability to make discovery after discovery after discovery. Because if your goal is to get bought out, which is what our goal is, you have to be able to leave meat on the bone for the guy that's buying it. You can't find all the ounces and say, here you go. You have to be able to show a proof of concept, put together a really good starter, and then give that new company an opportunity to go in there and find discoveries over generations. And the third thing is you need good metallurgy. And those 3 things, we'll probably talk about infrastructure at some point, right? Infrastructure is one of those things that is convenient. I'd love to have a project right near a road and power and all that, but the rocks don't know where the power lines are. And just staking something near infrastructure isn't the business model. Our business model is, follow the rocks, go to the good rocks. And if you make that world-class discovery, which is high grade, good metallurgy, and, generational impact for exploration discoveries, then they will buy it. If you find it, they will buy it. And if you can look at all the big discoveries in Canada, going back Voisey's Bay in the mid-90s, in a big remote part of Voisey's Bay. No one questioned that when it was found. The diamond discoveries in northern Canada, remote, very remote, but it was clear early on that those were going to be buried big. And there's lots of examples, like even Meliadine in Rankin Inlet that was owned by Agnico. That thing set as a geochemical anomaly that was curious for a long time until someone put it together. So our model is, find those things that are going to generate those transformational returns. So your question was, have I made more money than I've spent? Well, when we started Kaminak, we were very nimble. We were a prospect generator. We raised about $5 million and we spent that probably over about 4 years. And we never drilled anything with our own money. We always did joint ventures. But when we came across the coffee project in Yukon, there's no way I was letting someone else drill that, right? The geochemical anomalies, the trenching, the footprint, it was very suggestive that something there was big. So we went against the prospect generator model and we drilled it with our money. Now that was back in the financial crisis of 2009. Mining companies couldn't raise money, but we had $5 million in the bank because we had raised it through a financing 2 years earlier. So being nimble through those hard times and preserving our cash gave us the opportunity to really make those discoveries in the Yukon in 2009, 2010. And we drilled the first 400 holes, my team and I, and we took that thing from the first hole to over a 5 million ounce resource. And that company was eventually bought for over 500 million. And the company that owns it now is worth 1.3 billion. And that all started with, some soil sampling and working with Sean Ryan, who's a great guy. I love Sean. And then, buying that property from him and then using the geological tools to drill the first hole. It was amazing. And, then after that, I took a bit of time off and I moved here to Southwestern Ontario and my son was born and thought about getting back into it. Again, went and had coffee with John Robbins and Craig Roberts, who was a good friend of mine, and said, Rob, why don't you get back in the driver's seat? And that's how I got back into Prospector. So I was an advisor to the company for a little bit. And, Craig Roberts, who was the CEO at the time, said, hey, I'm looking to step back. Why don't you bring your team in and, see if you can't get the band back together. And so that's what we did. And so I became CEO of Prospector in the fall of 2023. And then we acquired our ML project or Mike Lake project in early 2024 and pretty much right to date now.
Is there something else that you do right now outside of Prospector? Do you have any other positions, CEO or board positions or anything else that takes up any of your time?
No, I'm 100% Prospector. Or what I will say is 100% Prospector shareholder. So I know, remember I mentioned about what do all the great discoveries have in common or the great people? Every one of them had one job. They weren't consultants. They don't have, I'm not, they weren't directors on 5 different things. As you said, Christian, these things are hard and they require diligent people to pay attention to them, especially in high grade gold systems. So I know, when we're going through the process, again, I say, well, what do companies want in deposits? They want high grade, they want good metallurgy, they want near surface. Well, what do investors want in CEOs, right? They want me to put my own money into the deal, which I do. I've got over $1 million into Prospector. I just spent $250,000 purchasing warrants in the spring. I've never sold a share, right? Investors want that. They want dedicated management, right? So I don't go on the board of other companies and I don't migrate. I don't even invest in companies. I have like a small, like a couple of share certificates under my pillow. Like I'm not a junior mining junkie. I'm just a geologist who loves exploring, figuring out the puzzle, and we're at the right part of the value chain.
You mentioned $1 million in a Prospector and a bit on warrants. Give us an idea on your average price you paid for all your Prospector shares.
So the warrants were at 30 cents, and that was about $250,000. The financing you participated in last year, Christian, I would have probably put 150 grand into that. And then the one before that, probably 200 grand. And then working up to it the year before that, I wrote a bunch of flow through checks. And like when I was an advisor to the company, I was writing flow through checks 22, 23, and then into 2020, 2024. Bought probably 100 grand in the open market. What is my average cost base? I don't know. Like I own about 4.4 million shares, so probably under 25 cents.
Hmm. Good for you. Congratulations on that win. Well, it's not a win until you've sold.
Well,
Is there what about the how the company came to be in the first place? I remember talking to Alex all that time ago, maybe 3 years ago or something like that. So how did this company come to be in the first place? And really where I'm going with this is I'm looking for paper flows. I'm looking for, is there cheap paper? If there
yeah.
is cheap paper, who's got it?
Yeah. Well, Christian does. Hopefully still has it. So back in like 2010, 2011, this was a company called Ethos Gold Corporation. It was run by a gentleman named Gary Freeman. And Gary unfortunately passed away. And one of his good friends, Craig Roberts, who's a very smart mining engineer. I won't offend him by calling him a geologist. He's an engineer. He took over the company after Gary had passed away. And his model was to try to find a project. And he toiled at a few things, had a few good ideas, but Craig now is retired and he's living on a beach in Australia. So what we did was, in order to cure that cheap paper, we rolled the company back before we acquired ML. So that was that got rid of a lot of cheap paper. So when the financing we did in 2024, when we announced the project acquisition, I think was a blended price of 13 cents. And then the one last year, I think, was about the same. Now, our supporters are primarily retail brokers in Vancouver, Haywood, Ventum, Canaccord, and they've been big supporters. And they continue to be. They continue to ask me updates, which means they're still shareholders, right? That's the easiest way to tell if someone's a shareholder. If they're not asking you any questions anymore, they're not shareholders, right? But with B2 owning 20%, Alpiana owning, or Alex Gubbins owning 10%, we've seen a big shift institutional now. And even the Troilus, we bought this company from Troilus for 9 million shares. That's been crossed out. And it's been crossed out to different institutions here in Canada and overseas as well. So I don't think there's, I'm trying to get to your question on the cheap paper. Consolidating it in 2024 took care of a lot of that. And also, our executive director, Andrew Rockendale, and I, he's like, not only is he one of my closest friends personally, but he's the like the angel on your shoulder that says, reminds you to, when he put together the book on our financings, it's like, and he chose the guys, like we handpicked those early guys because they're ones that supported us in Kaminak, right? And that we know who held paper from 5 cents at Kaminak to $4.
Hmm.
So we went back to those guys again and said, we know you guys hold stock. I don't have a problem. Like if you got if you want to buy stock in this company, we'd love to have you. So part of it is finding the right shareholder base, and and that's hard, right? So oftentimes money's not available, but that doesn't mean you do money at all costs, right? So we did strategic financings with very important and key people to us that were drinking the Kool-Aid, right? That we're understanding that investing in Prospector, investing in my team, it is about getting to the end zone, not just the next news release. And so, when someone realizes, like, I can tell right away how long term someone is too, when the first question they ask is, when's your next news release? Right? It generally means they're looking for an opportunity to sell their stock. Whereas I'll have a meeting with a shareholder or a potential shareholder, and we'll go an hour, and they'll never ask me once about news flow or next news release or assay lab turnaround. And I'm thinking, okay, well, they're not worried about the next news release. They're worried about the next 30 news releases, right? So, when you find those people, and they are out there, I know our industry gets kind of a bad rap sometimes about quick money, but there's very smart money and there's very smart people. And there's very smart technical people as well that don't necessarily have to be a geologist. And I find that the bigger the check writer or the bigger the shareholder, the smarter the questions and the more rigor in the due diligence. And I find a lot of folks are asking me questions, the same questions I ask myself. So when you find those key shareholders, they stick and they support. and they trust you that you're implementing that vision, and it doesn't take just one news release.
Staying on the topic of incentives here, Rob, do insiders or any of the management directors, whoever, does anybody personally own a royalty on the project,
No.
or any of the concessions that you have?
No, there's no non-arm's length parties at all involved. Yeah, I'm just there's nothing.
And all that insider ownership that you talked about, so it's like almost 6%, 5.7%. Is that all? That's all reporting then, because you said it's not. There's nothing like non-arm's length and anything like that.
Yeah, so I own about 4.5 million shares. Craig Roberts, my co-chairman, he owns about the same. So that's 9 million shares right there. We're the two biggest insider shareholders. Now, our advisors, John Robbins, Jim Paterson, they don't disclose their shareholdings, and their information is private. But again, they're very close friends of mine, and they've been involved. They were involved in Kaminak from day one right to the end as well. So, not only reporting insiders, but also associates as well.
Yeah.
One thing that I think is important too, and again, this could change tomorrow, right? But as of right now, we have several geologists on staff, and we're just adding more to our technical team. They had stock options at 20 cents, and they drilled all these holes last summer, and they did not exercise, right? So stock went from 20 cents to $1.50, and our geologists have decided to hold on to their stock options for another round of drilling. To me, that's a very strong supportive statement that they're drinking the Kool-Aid too. Now, then that might be a very smart decision or a very dumb decision. But as of today, and now watch, 10 minutes from now, maybe a warrant certificate or an option certificate come across my desk. but as of today, they're long with everybody else.
Yeah, fair enough. And that's what I'm looking for here. What about change in control fees? What does that look like right now?
Yeah, I have a change of control for 12 months, and I've given that to our geologist as well.
Yeah.
And like my salary, I think I make 350, and our geologists, I won't disclose their salary because it's a competitive landscape out there. But they're well compensated, and they have RSUs as well. I have DSUs. So the difference between a DSU and an RSU, as you know, is a DSU can only be exercised when the game is over, whereas RSUs, they have 12-month and 18-month strike price on them. So not only do our geologists, and I really firmly believe that you need to incentivize and get everybody involved in your company and the value chain from top to bottom, whether it be your corporate secretary, your geologists, or your legal team. Having them involved and having them benefit is big, because as I mentioned earlier, it takes a village to build these companies, right? And having your geologists compensated. I know lots of geologists have made discoveries that have never gotten any money out of it, right? And common management, look, I mean, I didn't even give myself options in the last round. I gave them all to the geologists, right? When we did stock options. A lot of guys will keep all the options for themselves, right? So if you go back and look at the stock option exercise or stock option grant from 2025, there was zero for me. And it all went to other directors or technical people, because I think having them make a bit of money and put money in their jeans is more important than anything, because they all have young families and they all have obligations. And look, they're being away from home. They're working hard. I'm asking them to do things that normal employers don't. I'm asking them at 4 in the morning to get me something, or at 8 p.m. to get me something, right? And when they go and their wife says, "What are you doing?" The whole family needs to know why they're doing it and understand that it's a positive thing. So, and that's just from seeing things over the years, right?
Yeah.
And I'm lucky enough that geologists that work with us, I've all known for 20 years or more. Guys that go back to the Kaminak days. We're a very tight group of people, and we're all here for the same purpose. We're all drinking from the same cooler, which is important.
Yeah. So Christian, did you hear that? So 4 o'clock in the morning, 8 o'clock in the evening. Maybe I should be calling you up at 4 o'clock as well.
I'll be
Um,
fast asleep both of those times.
as one is. Um, we'll talk a little bit more about the asset. Actually, now might be a good time to talk a little bit more about the asset. And Christian, you've been quiet for a little while, so go ahead, take it over.
I love to hear you talk, Antonio. Um, all jokes aside, Rob, let's dive into the history of Mike Lake here a bit. Because there's quite a bit of work done, and even some, I mean, not recent, but some drilling in 2005.
Mhm.
How did you acquire the asset, and why didn't Troilus do anything with it? Give us
Mhm.
some background there.
Yeah, so I mean, it actually hasn't seen that much work, to be honest. When you look at it, you dig into it. It was if for I mean, I think the first gold showing or copper showings in the area were known like in the 70s or late 60s. The first ever drilling on the project that I know of that I can think of was 2005. And it was by a company called Dynamite Resources, and they were primarily looking for copper, and they were looking at, the models are interesting how they've evolved over the years. There's intrusion related, and there's intrusions there. There's skarns, and there's skarn related, and a lot of the exploration is vectored towards models. And the early work there, I know some of the guys that did it, they're excellent geologists and excellent explorationists. And they're limited by availability of money. In the late 90s, Homestake was in this area and they staked some claims that eventually became Barrick. And they did a bunch of trenches that had terrific grades, like 20 grams over 5 meters in a trench. But then Homestake became Barrick in 1998, and they left for Yukon. And so all of these things never got drilled. And so it went back to the junior company that had owned it before. And then Bre-X happened, and not a lot went on for a few years. Then in 2005, Dynamite Resources purchased it and drilled about 80 holes, mostly using a model of a flat-lying stratigraphic copper horizon with some gold in it. Um, and they had some success, but at the time there wasn't really a lot of constraints on the structural geology. And you'll hear me talk a lot about structural geology because it's just basically faults, right? And our working model for how we explore for deposits is, high grade deposits. If you want high grade deposits, they're going to be focused in faults, right? And whether it's in Ontario or Quebec in the Archean rocks or in the younger rocks in the Yukon, yes, there's bulk tonnage scenarios everywhere, but the very high grade material is hosted in these planar fault zones. And so, we had technology, like we have LiDAR, which really does a good mapping of all the fault zones. And we use satellite imagery in 2024. And that imaged the alteration chemistry from the satellites. And when you superimpose that on your LiDAR, you find out where the fault zones are. And even 20 years ago, that technology wasn't available. So, the drilling that was done there in 2025, the model they were primarily following was, there's an intrusion and there's alteration around the intrusion. That's what you drill. And they had some success because the fault zones do go through that. But the fault zones go out of the intrusions into the wall rocks. And that's where we're finding the best success. The best gold we've found on this project so far is not in the intrusions, right? So if you're focusing on the intrusions, or if you're focusing on a typical intrusion-related system, you wouldn't have found the test zone, or you wouldn't have found the Skarn Ridge zone because they're not hosted in the intrusion. Now, that being said, we haven't really explored the intrusions yet, and we'll do that this year as well. Maybe there is an intrusion-related system here, but the real reason why I think this project hadn't seen consistent work over the years is because it didn't fit the classic model. And when Troilus acquired this thing from Troilus used to be a company called Pitch Black Resources. And Pitch Black became Troilus in 2017 through a RTO, I believe. And this project sat on the shelf, and their focus became Quebec. And they've had a tremendous success working in the Troilus area in Quebec. They've got together a wonderful deposit. Justin Reed and his team deserve a lot of credit for putting that together. And in 2023, after the Snowline discovery, I was thinking about getting back into the Yukon. And I called Jody Gibson, who's a good friend of mine, our current VPX, and he's the guy that arguably found the underworld deposits. And said, hey, like we need to get back together and do something, and we need to start thinking about these high grade things. And we talked about a few different things, and I walked away. We both knew ML or Mike Lake was there, but I thought Sitka owned it originally, so I didn't really move on it. And then when I realized it wasn't owned by Sitka, Jody and I put our heads together, and he said, "Well, it's owned by Troilus." And I was like, "Well, I know Justin Reed. I'm going to give him a call." And Justin's like, "Yeah, I don't know much about this project. I'll see what I can find." And his guy said, "Yeah, we got this Yukon project in the books." And so the deal with Troilus was all shares, and it was about 9 million shares, and they had a 1 year hold on that stock, and so we didn't have to give any cash. Yeah, so they've exited the stock since then. That's been in their MD&A. They transferred it over to some institutions in Canada, I think, just after Christmas. So yeah, it's an interesting story. I love this, looking and researching in exploration histories, and what is overlooked and what is interesting. And even at Kaminak and the coffee days, it was right on the Yukon River, right? I mean, thousands of geologists went through there, including the old stampeders from the massive gold rush at Dawson, but no one walked up the hill. Why? Right? And the problem, and the reason there is the creeks aren't big placer deposits. All the placer deposits are on the other side of the river. So that's where people prospected. The coffee district, at the time, there was no known placer there, so nobody explored on it. And I thought, well, that's kind of a stupid reason, right? I mean, the rocks are the same, right? So it's funny how little things, and I call it dogma, but it's just little things that get, etched into your brain that tells you should go somewhere or you shouldn't go somewhere. And my mother would tell you that I was a kid that was into everything and most things I shouldn't have been. I was in the cupboards ripping apart stuff and everything. Tell me I can't do something and I'm going to go do it, right? Tell me there's no gold in that hill over there and I'm going to go do my best to prove you wrong. So yeah, the history of exploration at ML is fascinating. And the reason why we've been able to expand it so fast is because of the real quality of work that was done by the previous explorers, going back to prior to the homestake era, through to dynamite. Their descriptions are terrific. Their databases are terrific. And they in the reports, they said, this is what we saw. And they were constrained by budgets. They were talking about the hand to mouth. These companies were hand to mouth back then, right? And if you didn't drill gold in your first few holes, you didn't get more holes. You didn't get phase two. There's no such thing as a phase two in junior mining in 2004, right? 2005. So yeah, no, it's a lot of fun.
So how did Mike Lake get on your radar in the first place, and what were you seeing that, for example, Troilus or previous operators weren't seeing?
Well, it has a high grade footprint. So again, it's been known for a while. It's outside of Dawson, and in 2009, it was on my radar screen. But we took off at Coffee and we started drilling holes there, so I never got a chance to really follow up on it. But there's a number of very high grade surface samples there. And so remember earlier we were talking about, the three pillars of a great deposit are grade, metallurgy, and, shallow level. In my experience, if you look at a gold project and there's 1,000 surface samples and they all run a gram, the likelihood of your drilling running a gram is pretty high. But if you're seeing surface samples that run 10, 20, 30, 50, 100 grams per ton, even if they're grab samples, it says that the localization, the process that's forming high-grade systems is there. And that's really what caught my attention. And again, being a curious guy that, likes to go places where other people will avoid, this has got a copper component to it. And the classic intrusion-related gold systems are supposed to be gold only. And I think having this high-grade copper component skewed the results a little, or skewed the interpretation about what it should be. And even now, we've asked world experts what they think it is, and you'll get 5 different answers, right? So, the genetic model is to be determined. And like at coffee, we had experts ask them what they thought coffee was, and they all told us something different, right? But we treated it as an expert. So there's genetic models and there's exploration models, right? The exploration model is find these fault zones that host the high grade and drill them systematically. And if it's there, you should be able to find it with a systematic drilling. So that's what attracted me was the high grade and the copper. Now, I wouldn't say Troilus didn't have interest in it. I mean, I don't even know if they even knew they had it in their portfolio, to be honest, because it was an RTO project back in 2014. And, they ran with their Quebec project. So it wasn't that it was being ignored for so long. It was just that it was off the radar screen. And I know you guys remember, from 2012 onward, it was pretty bleak to raise money for gold anywhere, let alone Yukon. So knowing economic cycles and understanding money availability is also an important aspect of understanding a project history.
When you talk about, what did you say? So you said grade, depth, and metallurgy is what you said about a deposit.
Yep.
Size matters too, though my wife tells me that it doesn't, but I think she's wrong. What would it have to be? What would the deposit that you're looking for in that part of the Yukon? What would that have to be from the perspective of those four? So grade, size, metallurgy, and depth.
Yeah, good question, right? And that's an important one. Coffee was several million ounces, so and that got bought. So I think, if you're looking for something special anywhere in the world, right, I think you need to have scale. And you're right about the size. It's not tonnage. All ounces are not created equal, right? I mean, look at Donlin Creek in Alaska, 40 million ounces of gold. Every time someone mentions it, the gold number goes up. It's so huge. But it's a kind of a science experiment because the metallurgy is so poor. It needs an autoclave. It's going to be expensive. So having a big ounce count or a big size doesn't necessarily give you the whole story. But knowing that you can explore these things and systematically expand. So I don't know. You can never say when you have 3 million ounces, but when you don't, Christian, right? So what I try to do is I try to put all the green flags in front of us. I say in an average gold camp, anywhere in the world, there's always a preferred host rock, right? Like take, for example, the banded iron formations. You guys know these deposits, like the Homestake, the Muscle Whites. They're big, they're huge. But the banded iron formation makes up about 1% of the rock package, right? Or even in Ontario, if you're in Kirkland Lake, the dogma is that you need to be in cyanites or porphyries. And those make up about 10% of the overall rock package, which means 90% of your area is basically sterile. So one of the things I look for when I look for a project is I try to find, is there gold in more than one rock type? And an ML, every rock type has a gold sample in it that runs 10 grams or more. And what that tells me is the fault zones were active in every rock type, right? And that may not seem like a lot, but in a game where we're looking for lottery tickets, the more lottery tickets you have, the better. And if you've only got one rock type that is 5 meters wide, you know what your size is going to be. But if you know that your fault zones transect the entire project, and to me, that's what district scale means, right? District scale is one of the most overused, understood terms in our industry. People have a big land package, they call it district scale. But if you have one rock type in there that runs gold, that's not district scale. But if you have gold showings tip to toe, and every rock type has high grade in it, then that's district scale. So those are the things. That's, again, back to your question about what attracted me to Mike Lake or ML, is that there's gold in every rock type. And to the common person, they might say, well, of course there's gold in every rock type. That's not how it works, right? In most deposits, or let me rephrase it. What do the big deposits have in common that the small deposits don't? The big deposits have gold in multiple rock types, multiple settings, multiple environments, multiple surprises. The small ones usually have one control, one structure, one rock type. So, and you say, well, why is that? Well, it's evidence for multiple overprint, right? So these systems form, they just don't go plump, right? They form over tens of thousands, maybe millions of years. And when you find a good fault zone, it'll get reactivated, right? So a small fault zone, bloop, you get one rock type, one gold event. But then all of a sudden that fault gets reactivated and you get another fluid pulse, bloop, on top of that, bloop, 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 right? So the key to it is finding these good structural fault zones or these good elevators that continually bring things to the Earth's surface. Sometimes it's rocks you don't want, sometimes it's rocks that don't have gold in it, but keying in on the fault zones that have the opportunity for multiple pulses of gold mineralization is how you get a big one. Big deposits are just, in my opinion, big deposits are just, small deposits that kept forming longer, right? So a small deposit might form in 100 years, and then the fault zone stops. Big deposits, that fault zone's open for 10,000 years, and that activity keeps happening. And you get overprinting and remobilizing, right? So your first gold event might be a half gram, and then new fluids come in and remobilize that and concentrate it, right? So one of our working theories, and I mean, you won't find this in a textbook, and a smart geologist could say it's BS, but we think these deposits that form our team and I, and this is the stuff we talk about when there's a beer glass in front of us. We talk about what is the process that forms a 10 gram, 20 gram, 30 gram deposit, and it's a combination of effects of overprinting and continually new things happening and remobilizing and reconcentrating earlier low grade things. So that those are types of things that we look for, and those are the things that big deposits all have in common. And if you have all those things, then you have a lot of targets, and then you drill those targets, and with any luck, you can put together 3 million ounces. And you also have to know that 3 million ounce deposit probably isn't one big blob, right? I'm a big fan of the metric of ounces per vertical meter. So I think, when I'm looking for projects, everybody in the old days wanted a big super pit, right? One big pit that goes to the middle of the earth. And well, that's kind of stupid. It's only going to get the Kalgoorlie super pit. It takes like 45 minutes for that truck to get to the surface, right? It doesn't make any sense. So if you've got 3 or 4 pits all close to each other that all start at surface, then your first shovel load in each of those is no dilution, right? So, in my opinion, I mean, if that makes sense, in my opinion, it's like much better to have a deposit that starts at surface and then multiple deposits that start at surface, because ultimately this mine has to get financed and you need payback, right? So one of the big killers. So when I look at good projects that are going to get bought, I think about that payback. Nobody wants to buy a mine that's going to take 11 years to pay back and it's got a 20-year mine life. They want quick payback and then they want cash flow. So the way I try to vector our exploration towards that is find areas that have shallow, near surface, multiple near surface things, right? So there might be 5, like, coffee is actually, the Kaminak is actually 5 deposits of several 100,000 ounces. Right? It's not one big deposit. They cluster together. But what makes it interesting from an economic point of view is they all start at surface and the strip ratio is low and the payback should be quick, right? So those aren't something that I think a lot of explorationists think about when they put together their project or they choose a project. But when we don't take on a lot of things, right? I've only drilled a handful of projects in my life because I like to do this homework before we acquire a project. And when I see ML, for example, I see all these multiple high-grade things on surface. It says, hey, Rob, this could be one of those environments where you could potentially get, if we ever did find a resource, you could get a quick payback because you have multiple surface occurrences, right? So, if the objective is to make money for shareholders and do that through a purchase, line up your objectives with what people want to buy. And they want to buy things that, you just say, well, why is grade important? Grade is important because of the payback period and the development and the construction costs, right? There's great deposits out there that are sitting because of CapEx costs, right? So if you can show that you can mine high grade and pay back and show that there's cash flow, those things don't sit on the shelf, So, I mean, it's a little bit of a, there's lots going on there in that comment, but and these things are rare, right? But if you're patient and you look in areas that haven't seen a ton of exploration, these things can be they're out there, and there's more to be found.
Looking at the 2026 exploration program here, Rob, 25,000 meters of drilling plan. Do you think that will be enough to reach that 3 million ounce target? And then the second part of that question is like, how flexible are you with the 25,000 meters? Like, is there flexibility to increase it once you see good results?
Yeah, so I mean, again, the 3 million ounces is just what I think ultimately the project would need, right? I'm not saying we're close to that. And in fact, this year is not a resource year. Don't expect a compliant resource this year. This year is still put flesh on the bone and continue to find new ones. 25,000 meters, I mean, that accomplishes like so. People want to know about the test discovery. How big is it? And are there more of them? Well, our first 12,000 meters are all going to be within 3 kilometers of tests, right? So in that first 12,000 meters, we'll know if it's there. And so we don't need 30,000 meters for that. We just need 12. Now remember, all of our holes this year are shallower than 250 meters. So they're not deep holes. So again, so if we have, and I'm a big fan, like find ounces at surface and understand them and then drill deeper. So if we start to do that, you might see us expand the program to drill deeper, right? So I think, if we did, spend our 15 million and drill our 25,000 meters at the end of the year, I think that, even if we just did that, I think they can accomplish our goals. Our big hole last year of hole 31, which was, almost 15 grams per ton over 44 meters with almost 1.9% copper. Our first 15 holes are going to be within 500 meters of that, right? So our job is to find out if that's real and what direction it goes and how much of it is there. So that answer we'll have with that drilling. And also we'll have a better idea on the explorability of the rest of the project as well. So, with a very systematic approach, we need to show that ultimately the project has opportunities for discoveries all down the line. So, if say we make another discovery and the market demands, or the market saying, hey, you guys should drill more of this, then, we could add drills to drill deeper, because deeper holes are longer to drill, whereas shallow holes are quick. So our drillers are very good. We drill a hole every 2 days. So it's insanely quick how quick the drilling is, because the core and the drilling, the rock drills really well. It's soft, good recovery. So we get a lot of good, our cost per meter is good because the productivity and the drilling is good. Now, when you start drilling deeper holes, that productivity goes down, right? So, and we do envision that, like there is depth potential. So expanding things, if we have luck going this way laterally, then, the next logical thing is to go deeper. So right now, the budget does not have holes deeper than 250 meters. But if we saw the need for that, and that would be a good scenario, that might be how we would add some drills.
Mm-hmm. When you look at the targets that you have right now, or even the target areas, I think you have like 7 target areas or something like that. Where in those target areas do you think the growth would come from to work in the direction of that 3 million ounce resource? I understand you're not kind of boxing yourself, but to get to in that direction, where's the growth going to come from?
This project continually surprises me. We learned so much last year. Our best hole last year was 31. And a good friend of mine made the comment, well, what the hell were you doing for hole 1 to 30? And all joking aside, we did have some good results on some other areas. But what we learned is how to key in on the important aspects of the structure. And remember I mentioned there's gold in every rock type? Every rock type looks different and reacts different. In the northern part of the project, where the test zone is, there's a lot of structures. So we find that our best gold grades coincide where there's the most fault zones and where the most fault zones intersect each other, right? So that is vectoring our target. So I would say if you put a gun to my head and said, which area do you like the most, Rob? Clearly the test area in that sort of 3 to 4 kilometer area, because it's very target rich, all comes to surface. There's a surface expression for these fault zones, and the grade is there. Now, further to the south, the faults are a little harder to see because the rocks fracture differently. The rocks in the south are limestone. They don't fracture the same way that our silt zones do in the north. So it's a little bit more cryptic. But this is where I think the opportunity there to expand and actually find new high-grade systems like TESS are very high because now we have a better appreciation for what those structures really look like. So one of the things we did over the wintertime was, you drill, sorry, Mike, you drill a hole and you get a hit, and then over the wintertime, we'd extrapolate at the surface. And, 50 meters, say, what does it look like on surface, exactly where that drill hole should come? And at TESS, it comes to surface in these little fault zones, which we can trace. So now we have an idea of where to follow them. In the southern part of the project, where the rocks are different and the grade profile is different, the rocks fracture differently, right? So maybe we're looking at more subtle ways. So the faults aren't as obvious. But our guys have done a really good job of kind of vectoring in and using our model there. So I think there's some new targets. And the project continually surprises me. There's a bunch of stuff we're still going to learn on this project. And there's new surprises, there's new mineralization styles. And these are things that I think big deposits or big districts continually surprise. Different mineralization trends or different mineralization associations, right? The big gold camps in Ontario, for example, no two mines look alike. Like if we were in Timmins, you could go to the McIntyre mine and you'd see copper everywhere. And then you'd cross the street to the Dome mine and you'd see big porphyries. And then drive 20 miles and you go to the Hoyle Pond mine, which looks completely different, right? But they're all in the same district, even though they don't look the same. So we're although we do believe lookalikes are important, we're prepared to be surprised. And so if we stick to our exploration model, which is follow the geochemistry, follow the high-grade samples, and follow the fractures and follow the fault zones, we're going to continue to find different things. And, keying in on those things or recognizing them is the challenge. And that's what our group has done over the wintertime, is looking at different elemental associations. And like I mentioned, the intrusions. The intrusions make up probably 20 to 30% of this project area, and there are some gold showings in them. But we haven't drilled them yet to explore that IRGS potential. So that's something that we've got on our radar this year as well. Even though we're targeting these host rock or peripheral intrusion targets like TESS, Escar, and Ridge, our guys are already looking at how can we drill to find a classic intrusion-related gold system there. So even though we've been saying, you have to be very careful employing models because, like I mentioned, I think the reason why we had an opportunity on this project originally was because people thought, oh, well, it's an IRGS system, but there's no gold in the intrusion, so I'm not really sure. But we don't want to get caught in that illusion either, right? We want to make sure that we do our diligent geological checklist to either improve targets or disprove them. And when I worked for the major companies back in the early part of my decade, they had these bloody target ranking sheets, right? And at budget time, you'd be competing for budget money with all of the other guys in the company around the world. And so you'd get this target ranking sheet, and the company and the projects that had the highest ranking got the funding, right? But it would be, things like structural preparation, geochemistry, right? Potential metallurgy, right? Or if there's graphite there, you get a -1, right? And I'm not a big fan of those target sheets because I think they're too rigor. But I am a fan of always looking at your exploration criteria, so your checklist of things to do. Well, for us, it's A, identify the structures, B, identify the geochemistry, C, walk the ground, right? And that was one thing that if you said, Rob, what could you do differently last year, is we should have had more prospectors. We should have walked the ground more early on. And that's the mistake we won't be making this year. We're going to have guys, like every rock on the bloody property is orange, right? And so prospector will stop and say, oh, I'm just going to sample everything. And most of it doesn't run gold. But now we're going to have our prospectors focused in those fault zones, right? Where they're continually in mineralized corridors. So getting back to your question, where are the surprises going to be? What are the targets going to be? If this is a significant gold district, there will be those surprises. There will be things we weren't expecting. The test profile and even the core at test, nobody knows what that is, right? We're at PDAC Core Shack. Some of the world's best geologists looked at it and said, "I've never seen anything like it," right? So, what are we going to see next? We don't know, right? But if we stick to our basic criteria of exploration, drilling fault zones and looking things from a longitudinal perspective, that systematic approach will find them.
You said test is your favorite target, or the one that you're looking forward to the most. What's the target you're looking forward to the least? What's the wild card? What's kind of the biggest, the thing that keeps you up at night the most?
Keeps me up at night.
In terms
Well,
of targets, like which of the targets do you think could be is maybe the highest risk target here to drill?
yeah, well, so good question. Again, getting back to the early part of the conversation where I love to go where everyone else is afraid, or I love to go to the complicated rocks, right? If I'm confused or if I feel like I don't know something, I got to run into the burning house, right? And notoriously, when you run into that burning house, you realize there's no fire in there at all, right? And as geologists and as prospectors, they're two different people. Geologists and prospectors have way different jobs. Don't ask a geologist to prospect, and don't ask a prospector to be a geologist. Geologists love outcrop. They love, nice continuous exposure where we can take measurements. Prospectors just want to find gold. And the gold is always associated with these fault zones or these valleys. And when you get in there, there's lots of trees, there's lots of bugs, there's lots of swamp. It's ugly. Geologists don't like going down there, right? Geologists like to stay up high where the rock is. And I'm generalizing. My brethren will kill me for this, but prospectors like to get their hands dirty in the fault zones. And there are a number of fault zones and valleys that haven't been visited because, the bush is bad or it's tough walking. And those are the areas I want to get into. It keeps me up at night thinking that that might be a complete waste of time, but no one else has done it, right? And also some of the scarier stuff too, I guess from a geologist point of view is geologists don't like being wrong, right? No one does. I look at it as that's my job is to, we're not going to hit gold in every zone, but being wrong is part of the job. And you have to ask yourself, so ask yourself, did you do the right thing based on the evidence? So you go to an investor and you explain the risk. And the investor says, I understand that risk, go drill those holes. And I've been on projects where I've seen rock come out of the ground. I said, oh shit, that's not the rock I wanted. I've got some explaining to do. And it's never been hard because you go back to the investors and they say, well, Rob, you took our money and you spent it exactly how you said you were going to do. We understood the risk. Thank you. What are you doing next? Right. So when you say, what's the scary thing? Well, the scary thing is screwing up. The scary thing is not getting the results. But, when you realize that you're in an industry where being wrong is the norm, getting back to the right investor base, right? The same people that are invested in Prospector have invested in me over and over and over again, right? There's a small group of people that, I've gotten to know and trust and I've drilled dusters, right? I've had to go back and say, that's not there, right? And yeah, there's disappointment. But again, if you just stick to the playbook and spend the money, you'll get it. And there are some projects there are some areas in the property that would be considered very high risk at this stage. Like, for example, one idea that I really like is Scarn Ridge. It's a structural zone that goes and then it hits a cliff. And people think, oh, okay, it's gone. Well, our geologist went on the other side of the cliff and said, well, see if you can go find something out there. And they came back with a couple samples that ran 50 grams per ton. Right? So it's like, okay, gee, you know what? Just because there's a cliff there doesn't mean the fault ends. This is a crazy idea. Let's drill that. Right? So that's on our radar screen this year. That's an extremely high risk hole. But if it's there, it's going to extend the mineralization by potential kilometers. Right? I don't call those Hail Marys, but I call those drill holes that investors want. Investors want to know what exactly you're looking at, and deep holes too. I mentioned earlier, I don't like drilling deep holes until I understand the surface. But I'm not against throwing a deep hole in now and then just to get a sense. And we did that at Coffee and at Kaminak days early on. I think it was hole 20 we drilled, and we didn't hit much gold. But the important part of that hole is we saw that the mineralization at deeper looked refractory. So it said to us, this thing could be getting difficult metallurgy at depth. Let's stick to the shallow stuff, right? So, every hole is giving you information whether there's gold in it or not, right? So, yeah, there's plenty to lose sleep about, that's for sure.
When is drilling going to start, Rob? And will all three rigs be mobilized at the same time?
Yeah, so it's May 8th today. The guys are going to go open up camp next week. Drilling should be underway, assuming no problems and everything by, late May sort of thing, like, anywhere between the 20th onward. We're going to start with one drill, and that's going to focus right on the test zone, expanding hole 31 in every direction. The second drill is going to come in a couple weeks later. So we're going to stagger them. Right.
Okay.
We don't, we want to make sure what we're doing is working and then bring things in an orderly manner. And then the third drill will come in 2 weeks after that. So the first drill, test proper, expanding last year. Drill 2, test lookalikes within the 3-4 kilometers. Drill 3, broader scale project, things like Scarn Ridge, our Wildcat hole on some of the structural interpretations, and some other zones in the south.
Gotcha. When can we expect the first results?
Well, the labs are going to take probably 4 weeks to turn around. Also, we batch results. So one thing is you're not going to get any visual results this year. We're not putting out news releases that say we've got splashy looking mineralization. No semi-quantitative or XRF results. That's something I think everybody should know. So when I mentioned earlier, we drill a hole every couple days. So we send 4 to 6 holes to the lab at one time. Now, obviously, I'm expecting hole 1 first, right? But sometimes I get hole results from, the middle of hole 4 before I get anything from hole 1, right? So, you have to wait sometimes for things to come back. Also, we re-assay our high values, and that can take a bit of time. So I've always told people, don't get too fessed up on assay time turnaround. And, there's plenty of reasons why. And by the time we release it, we do a lot of QA, QC. We look at our standards and our blanks. We sometimes we reanalyze those as well. We want to make sure that the numbers we're putting out are as robust as possible, because we put all of our data out on our website. Like, we're just not giving drill intercept highlights. We put everything out there. And when you put everything out there, you run the risk of someone finding a mistake. And, so we try to make sure that everything is in order and everything makes sense, and that the messaging for those results is there as well, right? We just won't, I don't want to put out a drill hole result or ever say, oh, here's a splashy hole. There's no context, right? So by putting, results together of 4 holes, 6 holes, 8 holes, 10 holes, there's context, right? One of the things you guys have probably caught me saying in the past is, drilling the first discovery hole is great, but, they should give the discovery award to the guy who drills gold in hole number 2, right? Because hole number 2 is the important one. That shows you've got geometry, right? So, and hole 3, hole 4, right? So, we're hoping that there'll be a steady news with 25,000 meters. I mean, that's going to be, upwards of 50,000 samples, perhaps, right? So there'll be lots of news flow up until probably close to Christmas.
Actually, to that point that you just said about do they understand the structural controls and everything, maybe we can dive in a little bit deeper. But historically, the property was seen as that stratabound scar system that you talked about. I'm seeing reduced intrusion. I should just call it RERGS or something like that, because I always have trouble pronouncing this, but reduced intrusion related gold system. I'm seeing that referenced a couple of times here and there. Those deposits like Snowline, they rely on those sheeted veins, but TESS it seems like TESS is tied to a steeply dipping breccia zone, right? So how confident are you that these structures have the lateral legs, to form a coherent deposit rather than you just having kind of isolated high grade pods and not being able to replicate that?
Yeah, so good question, right? And so what you try to do is when you have these fault zones, you want to trace them. And remember, I mentioned earlier on that when we take the drill hole result and we extrapolate at the surface, we find that that drill hole result is located in a little trough. And that trough is our fault zone. And we can trace those fault zones for several hundred meters. And there's a lot of satellite imagery as well, and that suggests that a lot of those values are altered. So, I mean, obviously, we're going to start drilling. So we know the envelopes, right? So the envelopes, and there's multiple, and we call it a corridor, Antonio. So the corridor at Tess is several kilometers wide, and within it, there's a number of structural features. And again, they coincide either with LiDAR structural or hyperspectral satellite imagery or geochemistry. And I mean, I have to keep shouting out to the previous workers here from the Dynamite days and Archer Cathro and Homestake. They have a tremendous geochemical database. They presented all the information. And again, so we're building on what previous folks had done. And, you know, the previous drilling that was done, again, yes, there was some that was chasing copper. Other holes were chasing gold, but they were chasing the intrusion related gold, right? And as I mentioned, you know, Tess being a fault zone, to me, it resembles a good old fashioned structurally controlled gold deposit. And those don't have that's not a textbook, right? And that's just, you know, whether you can have those types of things in Archean greenstone belts, you can have those types of things in British Columbia and young epithermal terrains, but it's understanding what hosts the gold is different than understanding why the gold is there. And we don't see the sheeted veins yet. And we may never see sheeted veins like Snowline or elsewhere. We're just scratching the surface on this district. But with respect to Tess and that Tess area, the key is extrapolating from surface where those fault zones go. And and there's several of them. And, you know, we can look on the maps and stuff like that. Like there's very good evidence that these are significant strike length or significant, length. And our job is to systematically drill those across. Now, we'll be doing fences as well, right? So remember earlier on in the discussion, I talked about the luxury of having that treasury and not having bankers breathing down our necks. This allows us to be very systematic with this project, right? So we're not trying to thread the needle to get one good drill result, right? And we're not creating a bird's nest of drill hole pattern. It'll be a very systematic and very well spaced out program designed to tell us, are we on the right track or not?
Yeah. Well, so does that mean that right now you're not sure? Because really what I'm looking for here is, do you have a repeatable model where you can go and actually, start working toward consistency and defining a deposit that will actually work? Do you feel like you have that model, or is there more work to be done here?
Yeah, like so, you know, like the test hole 31 and 32, like there's nothing on either side, right? But as I mentioned, the key is finding these fault zones, right? So I'm trying to figure out a different way to answer your question, but our working model, there's two different things. There's the genetic model, which is RIRGS, skarn, porphyry, all of that. Those are what nerds in universities worry about, right? The guys and that's what it's about. Sometimes explorationists like to label those things because it gets them financing, you know? Or it gets them, or you can say you're intrusion related because Snowline's got an intrusion and that seems financeable, right? But remember, there's been no textbook written on any of this stuff in the Yukon, and the models that we're talking about are being developed in real time, right? So you're seeing millions of ounces of gold discovered by dozens of geologists in the Yukon every year that are making up the textbook as they go. And when you talk to them, notoriously what you're finding is that, whether it's in an intrusion-related system or a porphyry system, the high-grade gold is always in the faults. And so it's not a genetic thing. It's more of a process-driven thing, if that makes sense, Antonio.
Yeah.
The marketing materials mentioned that there's a strong correlation between mineralization and the jarosite alteration.
Mhm.
Where does this play in with like following those fault structures and that alteration?
Yeah, good question. So jarosite is a mineral that's a direct breakdown or decay when sulfides weather, and it's also accompanied. So we get that through our satellite imagery because there's not a lot of vegetation on these rocks. They're sort of like just bare outcrops, and bare debris. So the image from the satellite reflects exactly what is in the rock. So we see jarosite, we see hematite, we see silica, we see quartz veining, a number of overprinting signatures that are in the faults. Not every fault has that, right? There's hundreds of faults. But how do you go from hundreds of faults to the ones that have gold? Well, there's a couple dozen that have the jarosite or have the silica or have the hematite, and those are the ones we're vectoring in on because at tests there's three zones in that hole. And when you extrapolate at the surface, it extrapolates perfectly with three different surface jarosite trends. And again, it's not just jarosite, it's silica and hematite and limonite. So there is a direct correlation, at least now, with surface mineralization or extrapolating our drill hits to surface in the fault zones that have that satellite image expression of jarosite and hematite and silica. Now, when you send your geologists out there to sample, they see a lot of disintegrated rock and a lot of orange rock. And if they're there long enough, they might see a bit of fresh rock and they might get a 3 gram sample, they might get a 5 gram sample, but those things are completely weathered, right? It's just like orange dust now because the fault zones, one thing being a fault zone, it's not competent rock because you're grinding rocks against each other. They're breaking up, they're fracturing, which means they're loose. And what that means is they weather and erode easy, which is why they form valleys. So understanding what's happening on the surface and the processes is the key to finding out what's happening below the surface.
You mentioned what was the big four again? So it's size, grade, depth, and met. So we
Metallurgy.
might as well talk about metallurgy here at this point. Um, your discovery hole had massive arsenopyrite, chalcopyrite, pyrrhotite, fine. But there's also cores bismuth and tellurium in there. What else do you know about the met now and how the gold might be recoverable? Are you doing any more met work
Yeah.
this year? Yeah. What do you know?
Yeah, a good question. So, when we assess projects, we look for red flags in projects or at least orange flags. I shouldn't say red flags, but, seeing, minerals like graphite or sooty sulfides in your rock can be a bad indicator of metallurgy. We don't see those associations, although we see visible gold in with a thin section, or pardon me, with a hand lens. And when you cut a slice of that and look at it under a microscope or an electron microprobe, you see native gold grains as well. And those gold grains sometimes have a bit of silver in them, and they're the mineral electrum, which is a gold-silver alloy, which we think is where the silver is coming from. So again, visible gold is a very positive early indicator of positive metallurgy, right? There is an association of bismuth and tellurium, and in the geochemistry, those are like the two key indicating elements. But when you look at the slice of rock under the high resolution microscope, where you're down to the micron, you'll see grains of gold, and you'll see bismuth and tellurium all around them. So the gold's not locked in the bismuth or the tellurium, but it's associated with it. And you see chalcopyrite, and the copper mineral is chalcopyrite, right? So it's a garden variety copper mineral. I should also mention this is not an oxide deposit, right? So a lot of deposits in the Yukon are heap leach or oxide deposit, and I know your viewers know a lot about those deposits. This is not one of those. This would be like a high grade traditional mill, and our hopes would be that the mineralization we find here could be recovered with technology that was invented 100 years ago, right? So it's got to be garden variety. And we haven't done formal bottle roll or metallurgical or resource caliber tests yet. After this season of drilling, we'll pick some samples and do a comprehensive initial geometallurgy, as it's called. It won't be designed to be usable for a 43101 right away, but we'll take our representative mineralization styles and run bulk samples, well, 50 kilogram to 100 kilogram samples to get an indication of what those recoveries could be. But again, from the preliminary indications is, seeing visible gold, coarse visible gold, is a very positive sign for reasonable metallurgy.
Do you have a comp for deposit and like the one that you're chasing for and the metallurgy and how that works there? Because I'm just trying to figure out what the typical recoveries might be on a deposit like the one you're chasing.
Good high grade structurally controlled gold deposits should have 90 to 95% recoveries,
Hmm.
right? So that's what I would be hoping. And some of it, the ultimate goal would be have some, recovered by gravity, and then you do a small ball mill and you recover the rust and you produce doré on surface. I mean, that would be plan A. Having the copper here is interesting, right? Chalcopyrite makes a wonderful concentrate. Now, that being said, if you assume based on today's prices, 1% copper is equivalent to a gram of gold. Copper is a minor player for us. We're looking at things like Tess is 14 grams gold and 2% copper, so well over 90% of the value is in the gold. But having a significant copper resources there as well, is something that's interesting. And silver is in the range of an ounce per ton in some of the holes, and that's bloody. That's over $100 Canadian an ounce. Like that was on that. Those numbers were unheard of a couple of years ago.
Hmm. Yeah. So it's not grade, it's not size, it's not metallurgy. What worries you? What's the biggest concern? What do you think is the biggest risk for what you have going on right now?
In all gold systems, the technical risk is always continuity. you know. And even in the best gold mines, like in the old days, like you work, in Red Lake, which was a beautiful exception, or you work at some of these high grade underground gold mines in Yellowknife, the resource, there was never a 43-101 resource. There was always like, have a year's worth of supply or a year's worth of reserves, mine it, and as you mine, you find more, right? And that's how it used to be done in the old days. And it was done like that because, drilling on big wide spaces and it just didn't provide value, right? So, continuity is always it's always your big fear. So how do I try to minimize that? Or how do I get into projects that have less of a likelihood for continuity? And it gets back to the comment about gold in every rock type. Or also, if gold is in every rock type, then it could be continuous. And another thing is too, there's a really interesting idea on the relative timing of the gold introduction. Remember, we talked about the pulses of gold coming in. Sometimes pulses of gold come in early, and then the rock is subsequently folded and faulted. That's going to kill your continuity, right? But if you fold your rocks, fault them, fold them again, and then the gold comes in, then you're looking at more continuity, right? So if the gold and the faults that host the gold look like they come in after all of the nastiness, then you're better off. You might have a better chance of continuity. So that's one thing that ML we like is that yes, those rocks are folded, and yes, they're faulted, and yes, they're complex, but the gold structures truck right through them. So your biggest fear in gold exploration, or my biggest fear anyway, in gold exploration or mining is drilling a hot hole, cold hole, cold hole, or the fault, they get faulted off, or an intrusion has come in and you hear the expression diked out. It's diked out the mineralization, or it's been stretched out or deformed. Those things can be deposit killers, right? And like even on the best deposits, like at Coffee, for example, when we drilled the Supremo, which is probably 1 million ounces, our hit ratio was still only 40%, and that's the best I've ever seen, right? So continuity, these things aren't continuous sheets, right? There's sweet spots and there's dead spots, but you minimize that by finding projects that have that late gold structure trucking through. Then you don't have to worry about it. If all the folding was before and all the deformation was before the gold came in, then it should have a lesser effect. Does that make sense?
Sure. Yeah.
Another concern could be First Nations. How is Prospector dealing with that?
Yeah, my career, I really enjoy interacting with First Nations, and I really believe that there's so much opportunity for everybody in the space. Um, and I lived in a northern community for several years in Canada, and I got to know people, and you get to talk to people about what their concerns are. And, you know, they all hate government, and so do we. We share that in common. But they just want to be part of it, right? They want to be part of the value chain. And I think historically, mining companies, when we go into communities, we make the mistake of thinking, oh, well, we'll create jobs and a tax base and everybody will be happy. People have jobs, right? Northern communities, there's no unemployment really if you don't want to be, because there's always something infrastructure wise that's happening. Um, and another thing is being involved in the value chain. So, you'd say, well, you go to a First Nation, you say, well, we're going to explore here, and you're going to have little input on how the land is stewarded, and yeah, maybe we'll give you a small royalty or profits at the end, but we'll come and talk to you in 20 years, and that's not how you work, right? Like they want to be involved in continuous. So if for example, if I find a deposit and sell it, then they should benefit from that, right? And we're working at very novel ways for agreements with First Nations that they can take part in the success of our company. And it's kind of unheard of in our industry. Another way to look at it too is, when you look at things that have become mines, again, on the geology we de-risk. So what do you have to do to de-risk this project for an investor in the ESG? Well, we involve the First Nations on the land. So one of the first things we do is before we drill anywhere, we did an archaeological site or an archaeological study. So we found out if there were any sensitive areas and we avoided them. Also, we've been doing baseline water and baseline geochemical and baseline wildlife samples from day one. So, we know that if you want advanced water permits for things, you need to have baseline data. So we're doing a part of that. We have site visits with the First Nations. We say, anytime you guys want to come, we'll come take a look, right? So, and we listen to what their concerns are. Like when we first came here in 2024, we asked them, like, what are your concerns? And they're like, well, we're worried about caribou, and we're worried about, a big footprint of a big camp going in. We said, okay, well, let's do two things. Is we're not going to build a camp. We'll use an existing camp, right? So we don't have to worry about that. So our footprint is very low. And on caribou, well, let's do a caribou study, right? And so let's look at the wildlife in the area from a sort of bigger structure. And I mean, it's not complicated, right? When you're dealing with humans is a lot easier than dealing with rocks, right? Because the humans can talk to you, and I think when you listen to First Nations and what their concerns are, especially in the Yukon, where there's been over 100 years of mining and they've had zero benefit, right? And they've got zero reason to trust mining companies. They have zero reason to trust government. And I walk in, why would they trust me, right? So I have to earn that trust. I have to do and follow up with my words. If I say, yeah, we'll do an archaeological study, I have to do it, right? Or, if I'm going to say, hey, well, we're going to be in the community and we're going to help sponsor this event, well, then I got to do it, right? And I got to know the group we're working with in Yukon back in the coffee days and the Kaminak days, and that's how we built that relationship. Every project is different, but we're opening a mine here, not a candy shop, right? You're not. There's going to be questions. There's going to be concerns. There's going to be people that are going to want to know what the benefits are. And I think if you're just transparent, and like that expression, like sunlight is the best disinfectant, right? I mean, people just want honesty and they want to know what the expectations are, and they want to participate in the upside and the opportunities more than just typical. So one of the things we do, it sounds pretty simple, but we avoid talking to the government until we have to. So in many jurisdictions, including Yukon, if you want to apply for a permit, you go to the government and they give you the forms, they fill out the permit, and then they send it to the First Nation for comment. What we do is we get the forms, we fill them out, then we go to the First Nation and we say, hey, this is the application we want to fill in or submit. What are your concerns? What can we do differently here? How can we accommodate? What areas of the project concern you, or what aspects? And then so we get their contribution, and then we send it to the government, right? So then the government looks at it and says, okay, well, the company's got this project proposal, but they've also got the First Nation on it. They can't say no to it, right? The biggest risk is how you communicate, and it's no different than any relationship. Um, you know, avoid complications by just having good dialogue. I mean, I know it sounds corny, but it works.
You said you do site visits with the First Nations. What does that look like? If let's say I wanted to do a site visit, and let's call it from Vancouver, how would I get to site for you?
So, Dawson City, the Klondike Gold Rush is about a 45-minute drive from where our campsite is. So that's where we do all our core, all of our unloading, all of our management. Then the site itself is about a 15-minute helicopter ride from our campsite. There's not road accessible, but if we can find the resource there, then a road should be easy enough to consider. Then the First Nation group is right in Dawson. So I think it was late 2024, early 2025, they just drove in and we took them through, showed them the maps, and then took them to site. Also, every year at the conference in Vancouver, when everyone goes to in January, we have face-to-face meetings with the chief and the council where we lay out our plans, lay out what we're going to do. And it's pretty straightforward. So yeah, I mean, getting the site and looking at the rocks is important. But with all the 3D software now and all of the digital maps, some people don't even want to go to site.
Well, maybe it's people who don't like steak and they prefer seafood over steak.
You're not going to let me live that down, are you?
No, I'm not going to forget it. I'll remember it for next time as well. What would I see if I'm on site though in terms of topography? If you bring me to where you made the discovery hole, where is it? Is it kind of flat, mountains around it, like you would expect in a Yukon, or what does it look like?
Yeah, so there's flat valleys, and then there's what southern people would call mountains. But they're definitely it's rugged, right? But it's not like steep cliffs that are insurmountable. Like our drilling test was on a slope, and the guys build a cradle for the drill. You can scurry up and down, probably a little faster than I can, and nowadays. Yeah, like access is pretty good. Like again, the rocks is probably 80% rock exposure. It's pretty good, and there's probably several hundred meters in vertical relief as well. But I mean, it's like you got to be fit to get up and down those hills. But there's no glaciers or anything like that. It's not like the images you see, or it's not like the Rocky Mountains where there's snow caps or anything like that. It's not that bad.
We all know what happened with Eagle 2 years ago, Rob. And there's been a Mongolian miner that signed an exclusivity agreement for Eagle. What does it mean to you, and what do you think that means for the Yukon?
Yeah, I mean, good question, right? I mean, I don't know anything more than you know on the exclusivity contract. Yeah, I mean, it's an unfortunate incident, and it's an unfortunate situation. What it means for guys like us is, I mean, luckily our project's not a heap leach, right? And I think, going forward for heap leach operations, there's going to be an increased level of scrutiny, right? So that, you want to move less rock and get more product. And this is where I think the importance of high grade deposits is going to come into play in Yukon and other jurisdictions. Mass earth moving exercises are going to become less popular with stakeholders. But as far as the group, I think from Singapore coming in, I don't know them, but their reputation is that they like a fixer-upper, and they. I mean, I haven't met them, I don't know them, but there is a tremendous opportunity there, and I mean, I think fortunately, the Eagle incident, it was an engineering failure, most likely, right? But it was not a human failure, right? It was not a human incident. It was it was a geological incident, right? But there's something like Yukon has got to overcome a few things, right? Nunavut and NWT overcame a lot by finding diamonds and gold. They put things into production. When I lived in Nunavut in 2004, at one point there was no mines in production. Lupin had shut down, Polaris had shut down, and then Pacific had shut down. And there was nothing. People were like, "Well, what are we going to do here? This is terrible." And then all of a sudden, Hope Bay came, and then now there's Back River, and then there's Meliadine, there's Meadowbank, and there's more mines you could ever possibly imagine, right? At least from a local perspective, and those are good, profitable mines, right? And that's one thing I think the Yukon needs is Yukon needs a great success story. It needs the type of deposit we're talking about. It needs something that has enough meat on the bone for everybody and can overcome challenges like infrastructure, challenges like power. The good ones do. Like I mentioned, Voisey's Bay and Lac de Gras. Those things are massive deposits that overcame all challenges. And that's what the Yukon needs. The Yukon needs that success story. And, I mean, I'm hoping I can be a part of it. But certainly, I think, with Yukon, the challenge has been also the deposits to date that have been come forward. A lot of them are bulk tonnage that require a lot of infrastructure, that require a lot of footprint, and those are things that are just going to be harder to get through the gate for a lot of different reasons. So, yeah, I mean, I'm not sure if that answers your questions a whole lot. I mean, pardon me, Victoria doesn't really influence or affect us, directly. But, certainly from an investor point of view, we get that question a lot. How are you related to Victoria, or what do you think? And, I mean, I think having someone come in and, see a future here is a positive for everybody.
Fair enough. Antonio mentioned this in the beginning, but Prospector is selling / spinning out all their non-core assets into
Yeah.
BeMetals to be renamed Lightning Resource Corp. Give us a bit more background on that.
Yeah, so this is exciting, actually. Before we got into the Yukon, we had a couple projects in Ontario, and we were going pretty slow on those because, again, I wanted to make sure we were engaging the First Nation properly, doing our baseline geochemistry, and then all of a sudden we went to the Yukon, and these projects got overshadowed. So the transaction is going to be accretive for the Prospector shareholders. So we're going to sell our non-Yukon stuff to BeMetals. They're going to consolidate. So Antonio, you mentioned the value of those 30 million shares would be 1.8 million. They've actually consolidated. So the stock this morning opened up on a post-consolidation basis. So it was at 60 cents. I don't know what it closed at today, but 60 cents, those 29 million shares would be worth about 18 million. So the Prospector
the shares that you're getting is on a post consolidation basis, and
correct.
Okay, that makes sense. So it's it's a lot more than this actually might be a good point. Actually, I'm sorry for interrupting. I know you were going on, but how are you actually going to make money? Because you couldn't really be seen selling those shares in the market, I assume. But so how are you actually going to monetize those shares?
Well, my objective is to always put the Prospector shareholder first. So how we're going to monetize them is we're going to distribute them pro rata to our shareholders. So if you own, and the closing date will be announced, and the exact ratio will be announced, but it should be on a ratio of about 5.5 to 1. So if you own 55,000 shares of Prospector, you're going to wake up in late June, early July, and have 10,000 shares of Lightning just show up in your account free of charge. And that's through a process called return of capital. And that's something that my lawyers are teaching me about every day. So how we monetize it is we give it to our shareholders. And, it's kind of like a dividend, right? But it's not. But it's good value add. It's good accretive. And so, we did this back in Kavanaugh before we went to the Yukon. We created a uranium company called Kivalliq Energy. and that had a uranium deposit in Yukon, or pardon me, in Nunavut. We took that from 6 million pounds to 50 million pounds, and shareholders made a lot of money on that secondary transaction, if you will. So I own, this is the benefit of, when you say management, why is it important for management to own shares in a company? Well, if management owns 4 million, 5 million shares, then they're going to do things that help that, right? So me personally, I'm going to probably get about 800,000 shares of those my own self through, because I own a big prospector position, right? So putting the shareholders' needs first is the most important thing. Now, then the next question is, well, what is it and why is it important and why does it have any value? Well, this is an idea that was approached us first from B2 Gold back before Christmas 2025. And they were a big shareholder in BeMetals. And BeMetals was working on different base metal projects. They had some projects in Africa. They had a gold project in Japan. But it was, it needed a refresh, needed a reset. It needed a fixer upper. And B2 management approached us and said, and I think this is based on our relationship that we've developed with them at Prospector on ML. It said, would you guys be interested in helping us, rejuvenate this company? And so we sat down with them and we said, well, let's put our assets in, and then the shareholders of Prospector benefit, and our technical team will help you guys, and I'll be this chairman, and we'll find a new CEO, and we'll do the reset. And the project focus for this company is going to be gold exploration and gold development in Canada. So it's a little bit of a new business model for BeMetals, and we're going to rename it to Lightning. But the business focus is going to be gold. And I'm excited because the team involved is first rate. So Clive Johnson, who's the current CEO of B2, he's retiring from B2 in a few weeks. He's going to come on as a director. Myself, my business partner and executive director of Prospector, Andrew Rockendale, he's coming on. Roger, his last name escapes me right now. Was a former B2 director. These guys started Bema Gold and B2. They know what they're doing, him and Clive. And a gentleman by the name of Andrew Brown, who's the current VP exploration for B2 Gold. I've known Andrew for 30 years. He's one of the best mine finders out there. He's going to be on the team. So it's an exciting opportunity. It's good value for shareholders and Prospector on something they probably didn't even know they had a month ago. And it's not going to take up a lot of my time. People ask me how much of my time is it going to be? Less, actually, than managing these projects behind the scene within Prospector. And we're looking for a new CEO. And we're going to make sure we hire the right person. Everyone's a bit different, so we are going to try to find the right person for that situation. But that transaction, there'll be more to, like, follow the website and the news on BeMetals and Prospector for more on that. But we're expecting closing sometime in early summer. And the plan is, again, as soon as Prospector gets those shares from BeMetals, we distribute them to our shareholders immediately, and they should be free trading.
It's good that you're looking for a new CEO. I see you looking at Christian. Don't look at him. He's taken. He's spoken for.
I don't know this.
I'm not interested.
Right?
But Rob, what do you make of the valuation here at this point now, where it is again? Given that, I mean, you're still early stage, right? There's a lot of stuff to be figured out, and it's based on that one project. Is it making you comfortable, seeing the market cap take up in the $300 million range?
Was it that high?
Yeah.
Well, I think a couple things. One is, like, I don't worry about the share price because I think the market is very efficient. Again, part of it is it's supply demand. And we've given the supply to very reliable shareholders that want to see how this movie ends. So when there's little supply, it means demand goes higher. So there's more demand than there is supply of the stock because people are holding it. And, that's key. And people want to see these results, right? People that bought the stock from November till now are all waiting for the first set of assay results. Um, so that's terrific. I don't fixate on share price. I mean, I'm not a seller, so I mean, that's not my concern on a day-to-day basis. Um, and since we're not raising money, I think that might have something to do with it too, actually, Antonio. As you know, like stocks can come under pressure a lot when people think there's a financing coming. But because we've got a strong treasury, people know there's no new supply coming. So it's who owns the supply now and where's the new supply coming? And people know there's no new supply. And we've just done a couple of weeks of marketing with folks, and I've made it very clear, don't offer us money because we're not interested. Like we've told our shareholders that we will give them the results on a not like if you own a share now, it won't be diluted. Those test results, good, bad, or ugly, you're going to own them with no dilution.
Yeah. When are people only offering you money? Is someone not offering you a way to spend that money? Like, are people offering you projects, and are you interested in looking at other projects?
Well, Lightning is going to look for new projects for sure. I think the Prospector shareholder is expecting us to focus on ML and the drilling this summer. Obviously, we can walk and chew gum, but shareholders are telling us, and again, the best way to be a good CEO is listen to what your shareholders want. They're the boss, right? And our shareholders are telling us to go drill ML and unfold the real potential here and not get distracted by other things. And so that's the task at hand.
Yeah. Yeah, fair enough. You mentioned marketing there for a second, and I can see Christian itching in his chair to ask you about marketing, so I'll let him do that.
Not much to ask here, Antonio. What's the schedule for marketing look like? How do you plan to market Prospector in the coming months?
Yeah, good question. So our VP corporate, Michael Rockendale, has just come on. He's a terrific young guy. If you call our office in Vancouver, he's the gentleman you're going to talk to. We've got our schedule now. So right now it's early May. We're going to be going to the Canaccord investment conference in Nevada end of next week. And that's an institutional conference where we'll meet with a couple dozen different institutions. And then I like to kind of get to work in the summertime, but usually by fall, you'll see us at the Beaver Creek Conference in Vail, and that's a great conference. October, we go to the New Orleans Investment Conference. That is such a great conference that is completely under the radar screen of most people. It's not a big retail conference, but it's a high net worth conference. And if you've got a good story and a good management team, that conference can really be impactful. It's run by a gentleman named Brian London. If you guys don't know Brian, he runs the Gold newsletter. I've known Brian for over 20 years. He supported me in everything I've done. High ethics, high morals, very straightforward business plan. In that conference, I first started going in 2006, and I was blown away with how much I got out of it. It's really worth it. November, we'll probably do one of the Zurich conferences. We're on the waiting list right now for that. We've done very little in Europe, right? So, I mean, I would ask you guys, what should we be doing in Europe? We're still the Zoom conferences, and the Zoom has really made it easy, right? So, with our broker friends and our banker friends, we did Zooms last week from everywhere from Asia to the UK to Belgium to friggin' 20 minutes away from here, right? So continually doing the story and talking to the bankers and talking to the brokers, right? And the brokers, I think, are the real key because they're listening. They're the sort of litmus test of what investors are thinking, right? So we talk to a lot of retail brokers and institutional brokers as well. So yeah, we go to the usual shows. I don't think we don't honestly spend a ton on marketing. I don't have the dollar figure for you, Christian, but ours is mostly one-on-one with the shareholders, whether it be on Zoom and I live about an hour and a half drive from Toronto. So I'm on the train quite regularly in there doing one-to-one meetings as well.
And do you, when you meet with investors, is it mostly retail that you're looking for, or do you think there's room for more strategic or bigger investments now that, I mean, you have a strategic that's almost 20%. It's not a blocking interest, but it's
Yeah.
close to it. Do you want more, and do you think having them at almost 20% scares off other people or other companies?
Yeah, good question, right? I mean, I'm certainly not going to argue with the outcome so far, right? Strong treasury, B2 as a shareholder, but they want us to succeed. You know, we work with their geologists. They've given us access to people in their company to help us with with a lot of our geochemistry and our structural interpretation. So, they're a shareholder plus, we're just not a random investment to them. With a lot of major companies, they might take toeholds in companies, but it's an investment, right? Part of a book, almost like an investment book. B2 doesn't do a lot of these things, and the ones they do are meaningful, and they've been a tremendous help for us. So I'm not going to jeopardize that. I'm not gonna put something else in there that's gonna make the people that are supportive of me skittish. And I'm not saying they would be, but why would I? Why would I? Look, if someone comes and offers, then sure, I'm going to go to the board and we'll consider it and we'll do what's best for the shareholder, as usual, right? But right now, and Alex Gubbins as a big shareholder as well. Alex, I don't know if you guys know Alex
Yeah.
Alpayana. We've been talking to him off and on for a year or two. We saw him in the summertime, and he was asking us. Remember I mentioned sometimes there's shareholders that ask you the questions that you ask yourself. He's one of them. He's a very, very well-rounded, mining investor. And, if I could find more guys like Alex that know exactly what we're trying to do and how we're trying to do it, then that'd be perfect, right? We think there's more room, on the institutional side. We know that there's some institutional ownership. We know that some institutions are waiting. They want to see more, right? They want to see more risk, or they want to see more de-risk. Now, with that de-risk, your upside is lower, right? But what's interesting about the mining value chain is there's someone the whole way down, right? So someone that thinks we're too risky now thinks we're, or someone that thought we were risky 6 months ago might not now. And so there's all kinds of there's always someone out there. And our objective is to find, whether it be an institution or, even with an institution, it's the portfolio manager, right? It's not the fund. It's who's running the portfolio, and are you aligned with what their thinking is. Another thing is that we don't have any major flow through funds here. Like here in Canada, we have flow through funds, as well, you guys know. Well, those guys are not in. We've never done an institutional flow through financing. So there's lots of areas. There's lots of guys that are on the sidelines, I think. And right now, the only way that someone can get in is by buying existing shares in the market. So, we try to do well-rounded, looking for folks. We find that right now there's like family offices or high net worth individuals in the mining industry. I think are a big part of our shareholder base. Guys' names that you would probably recognize, but they take positions personally. We don't get a lot of generalist calls, not yet. Like we don't get guys calling saying, "Well, I need to put 5% into mining or geology." We haven't seen that. I think we're still. I don't want to say niche, but we're still a pretty well kept secret, I think, on the overall stage.
We've discussed exploration budget, marketing a bit. What's your monthly G&A burn?
I think we're about 150K a month. So like I said, I make 350 grand a year. Rent, we share office space with the Discovery Group. It's $2,200 a month for rent. So we're pretty cheap guys. It wasn't long ago when we were living hand to mouth, so we're pretty frugal with that. Our GIC investments and our high interest savings account pays for a lot of our G&A. So, we don't spend a ton on that. We don't have, we don't have any high cost liabilities or anything like that.
Yeah. Let's maybe do a bit of a summary as we work toward wrapping up here. Catalyst calendar, what is that going to look like? You talked to us earlier about when you want to mobilize. It's pretty soon. We talked about when the assays are going to be coming, but talk to me about what I'm going to see if I'm following along with the Prospector website, checking the news and whatnot. What am I going to see in there over the next, call it 6 months, kind of maybe on a month by month basis?
Yeah. Well, first off, with the Lightning transaction, we're expecting to close in 60 days. So that'll be a big one, and that's when existing shareholders will have new shares in a company show up in their account. So that's certainly one big catalyst that I think people will be looking forward to. Drilling starting here in a couple of weeks. Results will probably be within 45 days after that, like before July 1st. So maybe before you get your Lightning distribution, you might get some first round of drill results. And then it'll be a steady stream of drill results right up until, probably October, November, maybe later. So it's drill, baby, drill. And on the corporate side, again, the strong treasury, just gives us so much optionality with how to do things, right? So, yeah, I don't know. It's going to be a lot of fun. I mean, you guys tell me what are the catalysts that you guys think are the most important ones for us?
Well, Christian as a shareholder probably wants you to sell the company for $1 billion next week, and he'll be happy.
No.
Why only $1 billion?
We're patiently waiting for the first test drill results here, Rob.
Yeah, likewise.
What's the biggest pushback you get, Rob, when you go out there and talk to people? What's the most fair criticism of Prospector right now?
Well, it's it's small, or how big is it going to be?
Yeah.
Right. And this is normal. The market wants to try to figure out what you have well before you have it, because everyone wants to get smart. And if you have a project, for example, in the Carlin Trend in Nevada or Red Lake or Timmins, and you find something, people have a pretty good idea what it's worth, right? Because there's so many examples around there. You can drill 5 grams over 5 meters on a highway in Northern Ontario. Someone will go, aha, this is what you should be worth. But when you're doing something that's unknown, or when you're in an area, or when you're creating the new district, no one knows how to value it. And we saw that with Kaminak, we drilled our first hole at Kaminak in 2010 with 15 grams over 17 meters. It was an awesome result. And some people understood what it meant. Other people said, well, it's still a little bit early. And then, or the question was, well, what is it? But people want to know, is it intrusion related? Is it porphyry? Because that's going to tell me how big it is. And that is so dangerous. Putting a model, and now you got people with AI, asking AI how big something is going to be based on a model. And I'm telling you, these models just they don't work, right? They want to say, okay, well, it's IRGS, so intrusion related, so it must be sheeted veins. So I'm looking at this grade, I'm looking at this tonnage. I know what you're worth. You're undervalued or overvalued. That is not a business model for investment, right? The business model should be, what do these guys have here with respect to grade, again, size, metallurgy, and depth to mineralization. And is this something that can become a deposit or a series of deposits that someone can buy? And, so I've heard this before, right? Yeah, this is a normal. The questions people have of us are normal. Is it big? How big is it going to be? What is it? No one knows. And those are not, and so someone might say, well, gee, I won't invest until you come back and someone tells me it's an IRGS and you have this or that, that'll never happen, because this thing is not a classic model fit, right? And, if you look again, you go back to those big deposits I mentioned, like whether it be Voisey's Bay or Hemlo or, the diamonds or Meliodine, those big deposits didn't get discovered because someone went up with a textbook, right? Or it didn't fall through the boardroom floor or the ceiling, right? It went out there because guys followed the empirical evidence. So normal doubters, I think. And you know what? I mean, they're the same questions I ask when I look at other companies too. It's like they're normal questions. Like we talk about continuity, right? We talk about repeatability, right? Now those are all normal questions, right? And our job is to address those questions and de-risk as orderly as we can. And we try to de-risk all aspects of the project. So eventually someone will look at this and say, I need to own it.
Yeah. What's your most fair criticism of us, Rob? What'd you come here hoping to talk about that we've not brought up?
Well, I thought this was going to be a quick little 20-minute interview and then we're going to get like in and out. Then when you said, long form, I'm like, oh, right on. I finally get to like, ramble on about all the little nuances. So, I'm not sure if people are still paying attention, but there's so much depth to this project. And, we have such a passionate team of explorers and, I'm just we're pretty happy with the group we've got now and where we're going and the shareholders we have. I mean, this industry is feast or famine, and I've been involved in both. And having something that is working towards the vision we've tried to put together is very rewarding, and I'm hoping shareholders benefit from that more than anybody.
That's a good answer, and it really has been a pleasure. I'm sure we're forgetting to ask you a bunch of things, but I'm sure that people watching and listening will help us out. So whatever we're forgetting to ask, please let us know. We'll ask it next time when Rob's on. I'm all out of questions, Christian. Christian, what do you have to say for yourself?
Thanks, Rob, for taking the time. Great extensive overview. And we hope to have you on the pod again after the first test results are out.
Yeah, for sure. Yeah, appreciate it. Yeah, it's been a lot of fun, guys. And, reach out if there's any other questions. I'm sure there is a bunch of stuff we forgot to talk about, right? But, we'll do it next time.
Appreciate it. Thank you so much for your time.
Thanks, Rob.
See you.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."